As it faces months-long financial crunch, Pakistan's currency plummeted to a record low. The Pakistani rupee was valued at 255.43 against the US dollar in the interbank market on Thursday. This drop comes a day after foreign exchange companies they removed a cap on the exchange rate. According to the data of the State Bank of Pakistan, the Pakistani rupee slid by 9.61% from Wednesday's market closure. This marks the largest single-day decline in both absolute and percentage terms. Since the introduction of the new exchange rate system in 1999, experts say the much-needed adjustment in the exchange was long overdue. Pakistan's foreign exchange reserves dwindled at a faster pace after the IMF refused to send its team for the 9th review of the $6 billion assistance package. The package was initially agreed on in 2019 after allowing the market to determine the exchange rate. The government is hoping that the IMF would soon send its team for talks and ultimately release the next tranche of $1.2 billion. As the Pakistani rupee plunged to a record low, domestic gold prices hit an all-time high in the country. Gold was trading at 195,500 Pakistani rupees per 10 grams, after gaining 4,900 Pakistani rupees on Thursday. But Pakistan's financial woes don't end there. Exacerbating troubles for the nation, its central bank-held forex is now at its lowest in more than 8 years. The State Bank of Pakistan held foreign reserves have plunged to $3.7 billion as the nation of 220 million people struggles to meet its finances. The reserves can only provide an import cover for less than a month. Amid the precarious condition of foreign reserves, more than 9,000 containers are stuck at Pakistan's ports, waiting to be paid for clearance. Many of these ships carrying essential commodities, including petroleum products, LNG, soybean, are awaiting payments as the government looks for inflows. But problems for Pakistan do not end there. It is internally embattled on the political front as well, as former Prime Minister Imran Khan is pushing hard for elections. Coalition leader Maryam Nawaz of the PMLN party was in London to meet former Prime Minister Nawaz Sharif. It is likely that the leaders discuss their way around the elections scheduled for October this year. Now for more on this, we're now being joined by Pakistan Bureau Chief Anas Malik. Anas, thank you so much for joining us. Pakistan's currency plummeted to a record low. The rupee was valued at 255.43 against the US dollar. What can you tell us?
Well, we've been talking about this for days now at WION, and yesterday we saw that it was a literal bloodbath in the Pakistani interbank market, where the Pakistani rupee plunged by about 24 rupees against a dollar, and it was being traded at 255 Pakistani rupees against $1 US. Now, in the morning, as the market opened up, it has further plunged another 5 rupees 75 paisas, and in the interbank market, dollar is currently being $1 US is currently being traded at about 261 Pakistani rupees. That has basically led to a 3,800 billion increase in Pakistan's loans just because of the dollar parity that has been there, the rupee and dollar parity that has been there. That is number one. Number two, the Pakistani reserves have depleted to about 3.7 billion. That's an all-time low, and experts say that's just sufficient money to run the country for another 15 to 17 days. That's what experts say, but the government says that it is making arrangements, and last night we saw some reprieve coming for the government as well when we saw that statement coming in from the IMF, in which they have seemingly agreed to send in their evaluation mission to Pakistan, which will begin their journey on the 31st of January and end their evaluation on the 8th of February this year.
Right, absolutely, Anas. In fact, I was just going to come to this. The government is hoping that the IMF would soon send its team. How do you see a way out of this?
Well, the government is adhering now, rather, it won't be wrong to say they're now adhering to the IMF regulations or IMF demands. For instance, the increase in GST or the imposition of general sales tax on petroleum and diesel or products and their prices. The government now seems to be moving in that direction. They've given the liberty to the market on the dollar
Right.
cap. So the dollar cap has been removed, and practically there's a free fall on the Pakistani rupees against $1. That's the other thing. Then we'll probably be seeing, or in fact we have seen talks of the removal of any possible subsidies on gas and electricity prices that the government have been giving, and any other minor subsidies. So the government now seems to be moving in the
Right.
direction of the IMF or adhering to the IMF demands,
All
something that will give them relief as and when this mission comes in. Him.
All right, Anas, thank you so much for joining us with all your inputs on this. We're also now being joined by Syed Javed Hassan from Islamabad. He's an economic columnist and former chairman of the Economic Advisory Group. Thank you so much for joining us on this broadcast.
Thank you for having me.
Same question to you. Pakistan's currency, as you know, has plummeted to a record low. How do you assess this, and what do you think has triggered this sharp slide? The government, as I mentioned earlier, is also hoping that the IMF will soon send its team for talks now.
The government has been trying to manage the currency at a fixed rate of around 230. It started off by around 225. This was really untenable. They basically had to deplete their foreign exchange reserves, which in the last 3 months itself has come down by about 4 billion. And effectively now, as was stated, we have probably less than half a month's imports there. Really, now it was a point where even the reserves that we have, about 3 billion of this comes from Saudi Arabia, which is not usable. It's also questionable whether the reserves, which include the UAE deposits of 2 billion, that is usable. So we are probably in negative territory when we start including the deposit of other countries, friendly countries. So really, there isn't much reserves to draw upon, which in the first place shouldn't have happened. So the government is having to go to the market and take money from the market to pay for imports, and that's why we have had to let go of the currency. There's reports that yesterday there was some oil cargoes, petroleum cargoes that had to be paid for, and there wasn't sufficient reserves to do so. So I think we cannot really at this moment say that the government has completely started adhering to the IMF conditionalities. It is more that it has been forced into a position, and it's doing as it has to.
Right, absolutely. As you mentioned, its central bank held forex is also at its lowest in more than 8 years. On the other hand, we see domestic gold prices hit an all-time high of over 195,000 rupees per 10 grams. How do you assess that?
Well, just about everyone is trying to move their savings and assets into dollar-based, either dollars or dollar-based commodities. There's essentially people are trying to preserve wealth since rupee has seen a free fall. The fixed rate was never tenable. People are just dollarizing or commoditizing their savings, and this will continue until there is some degree of stability in the rupee pricing. As of now, there isn't. And we are going to see this trend continue for some time. It has to be said, while the interbank rate today reached a maximum of about 264, it's hovering between 261 to 264. There is still a difference between the interbank rate and the black market rate. Now, the black market rate is hovering, or rather the curb market rate is hovering anywhere between 275 and 280. So you have still potentially there isn't a convergence between the open market, the curb market, and the interbank market. And so long as that persists, there will be further pressure on the rupee.
Right. And of course, the big question here, how do you think Pakistan can navigate this? Do you think the government will be able to pull the nation out of this crisis?
It's not an easy one. There's been much in terms of misgovernance in the last 3 months. We have tried to not implement what was agreed with the IMF just in a few months back in July, there was a long delayed review that was completed. It was agreed a number of conditionalities. Those were not fully implemented. There was a deviation in terms of having a market-based exchange rate. That was actually a break from the EFF conditionality. So to go back to IMF will require quite tough decisions by the government. It would require a lot of persuasion that Pakistan is determined to stick to commitments. I think while IMF has decided to come to Pakistan on request from Pakistan, it is not a given that the review will be successfully complete. I think there's still a chance that it might not succeed, and the IMF could go away without actually signing an SLA, that's the staff level agreement. So I hope they do. We all pray that they do in Pakistan. But so far, the Pakistani authorities haven't met the conditionalities which they're required to.
Right. Mr. Hassan, thank you so much for joining us on this broadcast with all your insights on this.
Thank you very much.
WION is now available in your country. Download the app now. Get all the news on the move.